Guys, thank you for tuning into this episode of Twin Finance. My name is Dylan, and today we're going to be talking about, in my opinion, the most undervalued stock currently on the market. I'm not talking maybe there's a bunch of spec stocks and whatnot that are going to be worth like trillions one day. I'm just hypothesizing here. Like in my opinion, on the S&P 500, this is the most undervalued stock, and we're going to get into a few reasons why. And I'm sure if you guys follow the channel, I've also talked about them in a few of my other videos for buys of the month, and it's pretty interesting with this stock. Is it's funny. I got in about 5 months ago, 6 months ago, back in March, I believe. That's when I entered in my position, and all they've been doing like since then is that they've actually just been decreasing, which is pretty ironic, right? So like most people, they think that's pretty crazy. Like they get in a stock and it keeps going down, but like in my case, where like if you truly believe in a stock and you believe it's a good value and the stock's going down, like you're over like that significant amount of time, like, all you're doing is licking your chops, right? Like you're just getting excited because like it's just buying opportunity, right? If you truly believe in them long term, you should have no problem with it going down even more. And yeah, so like let's just get into a few reasons why I believe, like, if you guys haven't gotten into the stock already, I mean, I believe at the current price they're at right now, I believe it's $19.97 is what they closed at today, and that's like a 6 or 7 year low, I think, for them. And like that's pretty crazy, guys. So I think right now, definitely a buy. So we'll get into some reasons here. I think the number one reason why they're a good buy is obviously they've been selling off a lot in the last bit here, and that was due to, it started off as like a lawsuit back in 5 6 months ago, and then it's just their earnings are kind of hurt, but like that's because they had the wrong management team in place. So like a lot of like controversy within the company, not actual business stuff was like changing a lot, but the company was just being run poorly, and many investors were just very like bearish on the way the company looked at that valuation. So it went through a sharp sell-off for sure. But I think I'm just gonna write Carl Icahn, and not just because Carl Icahn owns this stock, but that's the number one reason why this is a value buy too. Is obviously Carl Icahn looks for value. I mean, if you guys know who that is, he's looking for value, but not just because Carl Icahn owns it. The main reason is Carl Icahn brought in his team. So I think his son is the board member. He brought his son in and a bunch of other guys from his team, and they're working with the company now. They retained their CEO, Michael Polk. So, but like basically what they did, guys, is they just set them on the right foot, so on the right path, because they were kind of headed down. Like they were just getting inefficient, Newell. So like the investors got fed up with that. But Carl Icahn, obviously an activist investor, he came in, and obviously their goal, as many times as he likes to do this, is he comes in, just makes them more efficient. So he comes in, he says, all right, what's not working? Like, let's get rid of that. So just get rid of what's not working, and also start buying back some shares. So make the company more efficient, get rid of what's not working, stick with what is, get the company more profitable, and just start buying back shares, guys. That's usually his plan. And that's what he's planning with Newell, and I think that's a great plan for share value. Obviously, if a company's buying back shares, it's going to raise the price. The market is dying on me, actually, so I'm just going to switch to red here. The second reason is the tariffs that everyone's been been talking about with like Newell and stuff. It's overdone. It's overhyped, should I say? So the overhype is just a negative look on it. So like it's actually playing to the value buy favor, is that the negative outlook is getting overdone. So people are selling off aggressively, and what that's doing is obviously driving down the stock price. And what that's doing for value investors is opening up a great opportunity, right? So not much in the company's changing, but even if the tariffs do hit the company a little bit, which they said they might, but the thing, the market what they're in is the consumer goods and stuff. So like they can just shed that price onto the consumers, as many other companies are obviously going to do if the tariffs are imposed. So like not much will change. I mean, people are going to need their goods, their consumer goods. They own Rubbermaid, bunch of other companies if you guys want to look that up. But yeah, like consumer goods, I mean, you can just pass that on to the customer. So they also, like I said, their revenue is gonna fall because he's just making them more efficient. So just because their revenue's falling doesn't mean it's a bad thing. It just means that they're gonna become more efficient. So if they're more efficient over time, what that's gonna do is if you think about it from like here, I'll dumb it down. So if you think about it from like a personal finance, it's no different. If you think about it from a personal finance thing, say you're making $200,000 a year, but you're spending 180 to maintain that $200,000. Instead, you got another guy making $100,000, half the money, and he's only paying like $40,000 business expenses for himself on the year. So after all expenses and whatnot, the $100,000 guy's making $60,000, and the $200,000 guy's making $20,000. So he's 3 times more efficient. Well, he's actually more than 3 times more efficient, but he's making 3 times the money. So I know obviously at first it seems a little bit like hesitant. It's like, hey, like why is your earnings going to decrease, or like why is the revenue going to go down? But if you're more efficient, guys, it just makes sense, right? So what they did is they're going to go through some deals, sell off their inefficient assets. They're going to use that money to buy back shares and pay off debt. Forgot to mention that here. Obviously, they're going to pay off debt with that money too. And what that does, go back to the personal finance example. You got $40,000 of debt. What happens if you get $50,000 or $40,000? You can put that on the debt, or you can just keep it and the debt will keep growing, or you could just knock the debt off and now you have so much cash flow coming in after that, right, guys? So yeah, so we got Carl Icahn. The negative outlook, I mean, obviously, like that actually, like I said, is working in favor of the value investors. And then we also got right now, I mean, the third reason, it's not a big reason, but like a lot of like analyzing firms are actually coming around on them now, saying they're a buy. So I mean, Wells Fargo just released one last week. I think they said the Newell brand sell-off is overdone. It's overhyped. So I mean, if you're starting to get press out like that, I mean, over time, that's eventually they're gonna weigh on like people's opinions, and it's obviously gonna become positive. So right now, it's just the beginning of people are starting to say Newell's a good buy. So I mean, that's like I said, that's not a big reason, but any reason helps, guys. And like I said before, if you're becoming more efficient, and the negative press, that's just gonna fade, right? As long as their transformation plan with Icahn goes as planned, it's obviously gonna fade. And I don't think Carl Icahn buys a stock to lose money. But if we look at like the analysis of like their stock, 1997 is their stock price. I mean, obviously, if you go and look at their chart, like that's low. I think they were a $70 stock like a few years, not a few years ago, like a year and a half ago. So, but yeah, so forward PE, I think they're looking at right around like 8.9. So that's obviously a very strong number. Like I said, it's really about what you make, guys, what you net. Like in the personal finance example, it's no different with companies. And that's what you're seeing right now with like Apple and Amazon. Like they're both valued right around $1 trillion, but Apple just makes so much more money, right? So like over time, Apple's going to be able to maintain that valuation, and Amazon's just not. That's a topic for another video, guys. But like I said, 8.9 forward PE, obviously a very good outlook. They actually just fell below I think they're at 9.92 billion now market cap. So I think they're technically off the S&P index. And obviously, when they get back on that index, that's going to help their share price in the future. And then yeah, guys, so really that's pretty much it. But like I said, for people that are trying to make a quick buck, obviously if you bought it 5-6 months ago, Newell, like you're obviously not witnessing some great returns. But like guys, if you're a true value investor and you believe in the investments you make, like I said, it's just a value buy opportunity, and you should be licking your chops just to buy more. So that's what I'm doing. You got to keep building that position in there. Currently, one of the analyzing firms put a $30 target price on Newell in the next year. So I think mine, if I were to put a target price on them, it would probably be within the next year, probably be a little higher than that, probably like $34, honestly, guys. I don't think that's unfair for them to do, especially if their their share plan, not their share plan, their share buyback plan, their debt plan, transformation plan goes as planned. Icon bought majority of his shares around like $25, $26. So I mean, I don't really see Icon like selling out before he gets some significant returns. As you know, he's a pretty aggressive investor, and obviously, guys. So I think that's pretty much it. I mean, that sums up why they're a value buy. Currently, I think that's probably the most undervalued stock on the market, just because their sell-off is so dramatic and overdone. So yeah, guys, thank you for watching this video. If you liked it, remember to like the video down below, and also just feel free, if you think there's a stock more undervalued, or you think, hey, like Newell Brands isn't that good of a buy, like what are you thinking? Just leave that in the comment section below also. Yeah, thank you guys for watching, guys, and have a great day.